Time for the market report, a focus on livestock this week.
A lot of good reasons for that. We got some updates from the USDA and we speak to an expert about it. But first, the numbers. What were the week's biggest gains and losses? And then this month's cattle on feed, livestock slaughter, and chicken and eggs reports released by the USDA. What do they have to say? And finally, we speak with MSU Extension economist Dr. Josh Maples about the impact of these reports and what's truly moving the markets. So, markets closed the week still in the green, livestock up while row crops split. Let's take a look. The week's biggest gain, lean hogs, up nearly 11 cents, more than a 12.5% increase from the previous week. The week's biggest loss, cotton, down over 2 cents, nearly 3% decrease from the previous week. So, several USDA reports released recently, the cattle on feed, livestock slaughter, and chicken and eggs reports. As you saw, lean hog futures way up. That's a trend with most livestock. Once again, Bella Bingham gives the details.
This month's cattle on feed report says national inventory down 2% from March last year. That amounts to about 11.5 million head. Placements in feedlots dropped more dramatically by 18%. That amounts to about 1.5 million head. The livestock slaughter report also bearish on the percentages, but positive on the weights. All commercial red meat production down 7% from last year. How does that break up? Beef production down 7%, cattle slaughter down 11%, while live weights up 48 pounds. Veal production down 43%, pork production and hog slaughter down 7%, while live weights up 1 pound from a year ago. Lamb and mutton production down 3% and sheep slaughter down 2%, while live weight down 1 pound from a year ago. The chicken and eggs report shows a slow rebuild from bird flu. Egg production down 9%, while layers in the U.S. down 8% compared to a year ago. Egg-type chicks, as in those who will be primarily egg layers, up 2%, and eggs and incubators also up 4%. Broiler-type chicks, those who will be primarily grown for meat, down 1% from last year, while eggs and incubators up 2%.
Now you have the context. What do the experts have to say? I spoke with MSU livestock economist Dr. Josh Maples. He says a lot of this information is no big surprise to those who have been following the markets.
The inventory numbers being down was not a surprise. Zach, we've got tighter cattle supplies in general. We've been talking about that for a couple of years. We're starting to see some of that really play out in these cattle on feed numbers. And if you look at the placements numbers, it's really driven by fewer placements. Placements were down 18% compared to February of 2024. So big drop in placements. Some of that was impacted by the fact that we had an extra day in February 2024 because of leap year. Big impact was the dynamics last year. We had winter storms that kind of pushed more placements into February last year. So that does make this year's comparison look a little bigger. Just because we're comparing to a really big number a year ago. But even putting that to the side, the baseline of this is we have fewer calves that have hit the ground last year and the year before that. We've got tighter feeder cattle supplies, and we're starting to see that play out in these cattle on feed numbers. The number one driver of cattle prices is the supply side. We talk all the time about, is it demand that's really kind of pulling things? Is it large supplies, tight supplies? Right now, there's no question it is tight supplies. We have fewer cattle out there. We're gonna have a small calf crop this year compared to previous years. That is really what's driving these record high cattle prices that we're seeing. This is everything related to the supply side, but also on the trade front as well. The markets don't like uncertainty. And the typical thing that you see in an environment with big uncertainties, you see these wild swings one way and the other. So I don't think it's a fundamental change that affected the market to lead to that couple of day really big rally. I really do think it's the volatility piece of this sector right now. And I think we're going to continue to see some of that in the near term. HPAI is the big story right now. The positive news is egg prices have come down. You look at the latest report and egg prices are lower. Again, egg prices are volatile. That's a market where you can see some pretty wild swings. And so the 285 million layers was what this report said, laying hens. This was down about 9 million from a month ago and down about 28 million from a year ago, so still significant drops. The positive news here, Zach, is that if you look further back in the supply chain at the number of pullets, so these are chicks that are going to go on to become layers, those were up about 7%. And if you look at the eggs and incubators to ultimately become pullets or to become laying hens one day, those were also up. So we do see this industry reacting to these strong prices. We see some signs of larger supplies, but that's back down the supply chain a little bit right now. So tighter hen numbers right now, but we do see some signs of growth in the future.
And that's it for a deeper look into the markets. Due to lower herd size all around, not to mention ongoing bird flu, looks like the livestock markets will continue to stay fairly bullish.